Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Ever feel like annual reports are just walls of financial jargon? This one is no exception, but don't worry, by the end of this we'll know what's really going on with Putnam Core Equity Fund and what it means for investors. Today we're diving into Putnam Core Equity Fund's annual shareholder report. This filing reveals how the fund performed over the past year. Were they making smart money moves or fumbling the bag? Let's find out. Before we jump in, if you find value in getting the real story behind these corporate documents, make sure you subscribe and don't forget to join our awesome community on Discord to discuss all these things. The link's in the description below. First things first, this report covers the period from May of last year to April of this year. It gives us a snapshot of how the fund performed, what affected its performance, and any major changes that investors should be aware of. Let's talk about costs, because everyone wants to know how much they're paying. For Class A shares, the costs are about $99 for every $10,000 invested. That shakes out to about 0.94%. Remember, these numbers can get lower depending on fee waivers or expense reimbursements. So how did the fund actually do? For Class C shares, the fund returned 9.87% for the year. It's useful to compare that performance against a benchmark, and in this case, Putnam compares itself to the Russell 3000 index, which had 11 or 40% return for the same period. If you get back less than someone else, it's worth questioning why. What drove those numbers? Some of the top contributors to performance include overweight positions in CBRE Group, a commercial real estate company, and in Walmart, a multinational retail corporation. Basically, they bet bigger on those stocks and the stocks did okay. Also, the decision to not own Advanced Micro Devices, a semiconductor company, helped their performance, which means deciding against a stock also matters a lot. On the flip side, detractors from fund performance included the decision to not own Netflix, so they missed out some big gains there. Overweight positions in Lam Research, a semiconductor equipment company, and ConocoPhillips, an oil and natural gas company, also negatively affected performance. Looking at the longer term, here's how a $10,000 investment in Class A shares would have grown over the past decade. You can also see how the fund did with sales charges. Over the past year, Class A shares returned 10.69%. Over the last 5 years, the average annual return was 17.27%, and over the last 10 years, it was 12.07%. Not bad. Again, these numbers are without sales charges. With those pesky sales charges, you're looking at much smaller numbers and should think twice. It's important to remember that past performance doesn't guarantee future results, but it gives you some idea of how things have gone along. Now, let's switch gears to some key fund stats as of April. Total net assets were over $5 billion to be exact, and the portfolio held 144 different investments, and the portfolio turnover rate was a relatively modest 11%. Where was all that money parked? Looking at the portfolio composition, it was all over common stocks focused on technology, financials, and consumer discretionary. Now we're getting into the behind-the-scenes stuff. This section talks about significant changes to the fund. There have some important changes since last summer. Franklin Resources acquired Putnam, and it had some impacts on which company advises the fund. In November, there were more changes as PIL, a sub-advisor of the fund, merged with Franklin Templeton Investment Management Limited, which means it impacted the investment professionals in real life. The report highlights a change of fund managers. These small changes can impact the strategy of a fund if they have different opinions. As of January, Gerard Sullivan, Arthur Yeager, and Walter Scully are now managing the portfolio. In September, Class B shares were converted to Class A shares. This simplifies things for investors, but it is important to know what class of shares you're getting for your retirement. To wrap it up, if you want additional information, you can contact Franklin Templeton, see their prospectus or proxy voting information. So what's our take? Putnam Core Equity Fund seems to be holding steady. The Russell 3000 index exceeding those return numbers tells me the funds are lagging due to some bets that didn't deliver. That said, the significant changes in management and sub-advisors might have an effect on performance over the long haul. It's definitely something investors should watch closely. With expense ratios on the lower end, the fund isn't killing its clients with fees. At the end of the day, there's no screaming red flags, but nothing too exciting either. Alright, that was our breakdown of Putnam Core Equity Fund's annual filing. What are your thoughts? Is this a fund you'd consider investing in? Let everyone know in the comments below. If you found this analysis useful, hit that like button and subscribe for more corporate deep dives. And of course, don't forget to join our Discord channel. The link is in the description. Thanks for watching, and I'll see you all in the next video. We're going to be going through how to read a next video.